Bay Area Mortgage Coach John Payne, and this is the RateWatch Now Daily Update Report. Here's a snapshot of the mortgage-backed securities market yesterday. You can see we are on a rally, which is a little concerning for me because I was like, what's going on? Because we're getting better economic news, so the fundamental news is good, yet bonds are rallying, which is kind of like an oxymoron. So I'm looking at what's happening, and the only thing I can come up with is that the European concern is stronger than what we actually think, and we're having a flight to quality from European investors. What's going to make rates go up today? We have new jobless claims. They are actually down by 11,000 to 445,000 claims, and the continuous jobless claims are also down. But that's the headline news. But if you read down into it, you'll see that this is number, the continuous jobless claim number is down due to people running out of benefits. Also, consumer credit. We are using less credit here, and it has been that way for most of the year. I think we had two ticks where it went up a little bit, two different times. But for the most part, we're not utilizing credit at all in this environment. Rates go down today. Again, the euro concerns. I think that those concerns again isn't being spoken in an undertone, but I think we have a lot of European investors running over to the U.S. to buy our bonds in a flight to quality. And the Feds are looking to buy more bonds either today or tomorrow, is the word on the street. This is what the market has done so far this morning. We're still continuing our rally. Now, notice this. We are at 103.5. I get nervous at this level, and I'll show you that in a moment. This is what traders have been doing so far of the day, or rather lenders have been doing so far of the day. We have a price increase by 22 basis points. Here's my concern. We had a huge gap up opening yesterday upon better economic news, which means we should have gone the other way. Again today, better economic news with jobless claims, yet we have a gap up opening again. I'm getting a little nervous. So the reason why is because we don't do well in this level. So we don't stay here that long. So I will keep an eye on this. I have a few loans that I'm looking to lock. So I'm going to keep a very cautious eye on what's going on because I want to lock right now. But I'm a little concerned that this may get a little better or before it actually goes down. And really what's going to carry this will be the unemployment number that is due out tomorrow. So again, I think the flight to quality from Europe is causing these good rates that we're seeing right now and good pricing. But I am a little concerned because we're in the level where we don't normally stay here long. I do believe eventually we're going to come down and touch this trend line. And with the news that we're getting, I think that we're going to come back down to this range where we're more comfortable in. But that's yet to be seen until tomorrow with the unemployment number due out. In summary, new jobless claims were down 11,000. Continuing claims are also down, but that is due to people running out of benefits. Now, both the stock and the bond market is on fire, which is an oxymoron in itself because these two markets carry an inverse relationship. So it's very rare that we see both of them trending in the same direction. And the Fed speaks today. We have, I believe, it's 3 different Fed speaks today, and Honing is one of them who is totally against doing anything to stimulate the market, and the other 2 are for stimulating the market. So that's going to be quite interesting how that pans out. And we are in the new trading range, which 103.2 being a new support. I'm very nervous up in this area as I showed you on the graph. That's all I have for you today, Bay Area. Make it a great Thursday. If you know of anyone that can benefit from my morning updates, please pay it forward. Until tomorrow, Bay Area.